Are you confident? Do you have consistency? How much conviction do you have? I'm Daniel Gomez, the Confidence Architect, a business strategist, keynote speaker, executive coach, and best-selling author. On the Daniel Gomez Inspire Show, we will help you unlock confidence to create consistency and develop conviction. Together, we will discover the key that unlocks your confidence. Welcome back to another episode of the Daniel Gomez Inspire Show, where we motivate you, we inspire you. And today, man, we got some great insight for you where we're going to educate you another level. So I want you to get out your pen, get out your paper, because this gentleman, he's a dear friend of mine, dear brother. I'll tell you what, I got a chance to share the stage with them in New Jersey, and this guy is amazing. The wisdom that he shared from stage, I was like, dude, I need you on my podcast because we've never had this type of information. I bet you're wondering, what is that information? Well, get out your pen and paper, and let's welcome to the show, my brother, Patrick Rood. How you doing, my brother?
I'm doing good, Daniel. Thank you, sir.
Man, well, I know the beautiful person you are, but do me a favor. Introduce yourself to the Daniel Gomez Inspire Show.
Sure, absolutely. My name is Patrick Rood. I'm the owner of Rood Financial Services. I'm also a Grant Cardone licensee, so I'm a 10X coach, speaker, and mentor. I am also formerly a Dave Ramsey local provider as well. So tax, business, strategy, that's my forte. Also, I'm a two-time international best-selling author with my third book that just came out, The IRS Dirty Little Secrets, in the Guinness Book of World Records. Originally from Michigan, and now most recently from New Jersey, Philadelphia area. My firm, Rood Financial Services, we do tax strategy, accounting, fractional CFO work, and we cover 13 states across the U.S., and I have 3 offices.
Wow. Boom, baby. Look at that. So hold up your book real quick, because we're definitely going to talk about, what is the book called? You mean the IRS has secrets from us, the dirty little secrets?
Oh yeah. You think our government tells us everything, Daniel?
Well, that was what was interesting to me, because you speak with this from a passion. So what made you want to go into, right? You've been an entrepreneur for many years now, but there was a shift, and the passion, you took it even higher. So what made you want to become just really a CPA and really help people with their businesses and from this aspect?
So I want to make sure that I'm clear. I am not a CPA. I hire CPAs.
Okay. Well, I still going to
let's make a distinction there, but that's neither here nor there. What really got me into this was actually a family situation that happened. My father was a self-made man. He was no college education, but he became an engineer. He worked for 30 years in his field in plastic extrusion engineering, became one of the best in his field with the auto industry because we lived in southern Michigan. And he worked with companies like Ford, GM, Chrysler, Hyundai, Aeroquip, things like that, big national companies that were doing plastics manufacturing, and he was an engineer. Because he wasn't college educated, he had to work harder than everybody else. And finally, he got tired of making them rich and barely being able to eke out a living for us as a family. And so he went into business for himself in that industry. And because he had those connections with Ford, Chrysler, and GM, he actually made parts for General Motors, Ford, things like that, and was in business for, I think, a little bit over 6 years. We made it in business. Unfortunately, because of some tough choices he had to make as an entrepreneur, like, do I pay the IRS or do I pay my employees? Which that's not an uncommon situation that businesses end up getting themselves into at some point. The problem with that is that when my parents made that decision, there was nobody that could guide them as to how to deal with the IRS so that they could stay in business.
I love that,
They
right?
had
Because
no,
what
they
you
had
could,
no, yeah, go
because
ahead.
because what because what you're saying is, think about what he's saying, ladies and gentlemen. I want you to take notes down. I want you to take notes down because Patrick's going to drop some massive wisdom here. And maybe you've had to make that hard decision in your business and you had to choose, do I pay A or do I pay B? So I really want you to get a retrospect because Patrick's lived it with his parents. Now he has his own business where he's really helping entrepreneurs and small businesses and even small enterprises take the wisdom he knows now and help people. So I really want you to take what he's saying to heart. So continue on, Patrick, please.
So my parents were making $6-7 million a year in business and revenue, and because the IRS threatened to put a lien on everything they owned, my dad sold his equipment to one of his customers and went to work for them to pay off the back owed payroll taxes that he owed the IRS. Nobody was there to tell him that he could get on a payment plan, that he could negotiate with the IRS, that he could do an offer and compromise. There was nobody talked about those things. And the longer that it went on with him trying to fix it, like his line of credit got shut off because of the lien, his bank accounts got frozen, or they were threatening to freeze them. I forget which happened, but amongst that whole situation, he also, because of the stress, ended up in the hospital having a mild heart attack and mini strokes.
Wow. So let me ask you this: how old were you when this was going on with your dad in the business? Because I believe you said you were working with them for part of the season, correct?
Yeah, so when I wasn't in school, I worked with my father in the shop because we were there all the time anyway. So it was either I sit in the office and twiddle my thumbs, go outside and walk around in the woods, or I hop on the line and I make a few bucks.
Yeah. So let me ask you this:
Um,
from seeing your parents personally go through this, how did what are two things that you learned in business for yourself that you said I need to do something about it, but now it allowed you to make your business even better to being the taxman that you are.
that sales, how important sales and cash flow management really are. That was the first thing I learned. The second thing I learned is that there is the only thing that limits you in your success is a lack of knowledge. Because if my parents would have had somebody, a resource that they could have gone to resolve their issues or to take care of it so they didn't have to worry about it, they could just focus on their business, they'd still be in business today.
Yeah. Well, you gave three or four options that they could pay as far as like a payment plan or something you could do. And I think most people don't even realize that, or they go for help with a lawyer. And I know sometimes lawyers tend to charge a little bit, right? A lotto to get that the help. So if someone right now, we'll just say 2022 just finished and they're getting their taxes done, they went in, okay, the reality hit. Now they didn't realize, right? I think I went through this by the grace of God. We had the finances to pay, but one year we had to put out a nut of $32,000, and I said, well, I had the money saved for something else, but
Right.
let's just pay it. What do you do? Because if not, but what people don't realize to the magnitude, you can do it in payments, but then they charge you a higher interest rate, and then it's like kind of a credit card that has 20%. You're just paying the interest for a while, so it's the best thing to do is so when someone, we'll just say someone finished 2022, they were in the same scenario that I was a couple of years ago, $32,000 tax bill. What are some options if someone doesn't have that amount extra saved up for taxes? Because some people do save it up now. QuickBooks, I think, offers it to where you can kind of pay yourself in an account, you don't touch it. But what are some options if you don't have that $32,000? Because we definitely don't want what's happened to your parents happen to anybody right now that's listening to this episode.
There's actually a lot of options that you can do. Um, one of those things is um, finding additional
Call Patrick.
one of those things is finding additional deductions. So leveraging your section, and I talk about it a lot in the books, leveraging your section 179 deductions, as well as bonus depreciation. There's also a very little known fact that you can do is you can actually file for a change of accounting method, which means that if you have depreciation from past years that you haven't taken advantage of, you can go back and you can claim that depreciation in a current year, which could wipe out that entire tax liability.
Really? I didn't know that.
Yep.
So
I've done it for several of my clients.
So what's an example that maybe somebody has in their office, in their business, or that maybe they wouldn't? What comes to mind is this. I don't even know what I could. What is that, right? What type of equipment would qualify for that? Or
So
what
the
am I looking for?
biggest,
Am I looking for a printer? Am I looking for a company vehicle? Or what are some examples that we could go back and write that off? First of all,
yes.
how far back can we go back, and what qualifies for that?
You can go back up to, I went back one time up to 12 years.
Mm.
Because
And
there
this is all
was,
legal, right? This, I mean, I want
yeah,
people to hear this.
absolutely,
This
absolutely.
is
All
legal.
completely legal.
So,
Completely legal.
yeah, I mean, it's people. Patrick's the real deal. We're gonna get you his information, but listen and take notes, please. Because I brought him on this because first of all, I love the guy. We just really connected on a heart level, but he knows what he's talking about. And sometimes if you don't know what you don't know, you got to surround yourself with Patrick's.
So I'll give you a real life example. There was an automotive shop that I did the taxes for. These guys were fortunate enough to own their own building. However, the building that they owned, some years they claimed depreciation on it, some years they didn't, and it was inconsistent over time. And usually that's because when you switch accountants, sometimes everything doesn't come over properly. Or sometimes an accountant will do a sloppy job and they'll leave something out. I mean, I've made mistakes before. So, we're all human beings. We all make mistakes. And especially when you're dealing with so much data, it can happen. It doesn't mean that they were negligent. It just means that they weren't thorough, right?
Yeah.
So for this example, we went back, this was in 2019. We went back all the way to 2009. So
Wow.
10 years
10
we
years.
went back.
That's a decade. That's a long time.
Yeah. And so what happens is in that specific situation, we were like, hey, in 2007 and 2008, they claimed this depreciation on this schedule. But then from 2009 until 2014, there was no more depreciation claimed. So all of that depreciation, we were able to move forward and claim it on a current year. So you figure it was, say, $7,000 a year, roughly.
Wow.
That
That's
they
a
were able to
lot.
claim. Yeah, it was a lot of money, and it can be. It can be a lot of money. So another example of that would be, say, you start a business and you don't claim a vehicle when you bought it that year, or you don't claim mileage for that year, right? So you can
Yes.
go back and you can change your accounting method to account for those and apply them to a future year. Depreciation is one of the only things that you can utilize in that way.
And it helps because I remember when one year in 20, I think it was 2018, when we just we had bought a new car and for the business, and I was driving because I was doing a lot of trainings before COVID, and it was when we caught it, it was like close to $11,000 that we got
Yeah,
in write off, and
yeah, it's a substantial amount.
and that's that. So, but we would understand. So, ladies and gentlemen, I want you to understand this, and I'll let Patrick just kind of go more in depth because he's a professional at this. But the one thing you need to understand, ladies and gentlemen, is if you're doing a side gig and you're not doing it legally, you need to get legal first of all. You need to go out there. You need to get a DBA. You need to get an LLC, one of the two, whichever you choose. And I'm not here to tell you what it is, but I will tell you that an LLC for me gave us more tax brackets. And a great example of that is that if we'll just, I'm just going to use this number. If you're making $100,000 in revenue for your first 3 or 4 years, as just as a prime example, well, if you're a employee, they're going to tax you about 29-30% on that. We'll just say 30% as a number, just to, as a even number, 30%. So out of 100,000, really, you're only taking 70 minus all your other stuff. So really, after everything's said and done, 65,000 out of that 100,000. But if when you have an LLC or you're self-employed, what he's talking about, a depreciation and all that, it takes your tax bracket. It could be, I'm saying this is an example. You can take your tax bracket from 30% down to less than 10% or 10.5%. And it's a lot of money. That's $20,000. Am I right? Am I pretty accurate? Or
yeah,
talk to me?
Yeah,
talk
no,
to me,
you're right. You're
man.
100. You're 100% right. I would take it one step further. Is you can even take your tax bracket down to 0.
Really? Talk to
Yeah.
us about that.
So that's the big secret, is that taxes are optional. The only reason you pay them is because you're not playing the right game. You're not utilizing the law how it was intended. Right? So that's why it's one of the jokes I make in my book. I'm like, there's 2 things that we're always told that are a sure thing: death and taxes. Well, one of those is right, and I'm going to prove the other one wrong. Right? So you think about it, if you own nothing, you pay 0 tax. Right? So the game that the wealthy play is own nothing, but control everything.
Write that down, ladies and gentlemen. Own nothing, but control everything. How do we do that? You got my attention now. My ears are perking up underneath my headphones here.
So that can be done through layering of businesses, right? So intelligent, purposeful purchasing. Now you're always going to need some income, right? But the amount of income that you need, especially as a married person, is very small. There are a lot of loopholes. So say, for example, you have a lifestyle that, your mortgage or your rent, your food, and, your personal transportation costs and your personal entertainment costs can all be done for $60,000, right?
Yes.
That's the average, middle class, lower middle class, lifestyle across the country, right? If you are married and you have 2 kids that are, let's say, above the age of 5, you can pay those 2 children to work in your business $12,900 a year and pay 0 taxes on that income. And
wow,
you don't have to give that income to the children. As the parent, you get to control where that income goes. Right?
So you can pay it to the business.
Well, you can pay it for your lifestyle, but it's tax-free. Right? And then check this out. If you take a $25,000 salary from your business, just say because you have an S corp, you have to take a salary.
Yeah.
$25,000 is enough to cover, maybe your mortgage, maybe not much more than that, right?
Yes.
What's the standard deduction?
25,000.
Bingo. So now you're at a 0 tax. But you will pay a little bit, especially if you take that $25,000 as a salary.
I think I need to hire you, Patrick. But these are things that no one hears about.
No, nobody talks about it. And a lot of the reason is because people are afraid of the IRS. And that's because they're afraid of people that do shady things. Now, everything I just said, it sounds like that can't be right. Yeah. Because that's not what we're taught. we're taught to play along with the system, right?
But you don't know what you
But
don't know. I mean,
you don't know what you don't know. Exactly.
because
But
I'm listening to you talk, and I one day when we do is our corporate training, I need to bring you in because I know why they don't know. Because they think like freaking employees. Everyone thinks like an employee. If 98% of the world thinks like an employee, how are you going to know what the benefits are for the wealthy, which 2% is up there only? And I'm just
yep.
learning a lot of this stuff too, because I had to redo a lot of stuff, and it's just stuff that you don't know or you're not aware of, where you get a tax person, not Patrick, but one thing that I encourage my clients, because I'm a business coach, a good example of what we're talking about is I told him when he was out of California, I said, man, I said, it sounds like you need a new tax guy. He goes, well, why? I've been with my guy forever. Well, great. I get it. I said, but let me ask you this. How many clients does your tax person have, your accountant, that has a net worth of over $3 million? I don't know. Okay, great. How many clients does he have that have a net worth of $5 million? I don't know. Okay. How many does he have that have a net worth of $10 million? I don't know. Those are questions you need to ask him. Because if you're dealing with a CPA, you're dealing with an accountant that their tax bracket, if everybody they deal with you say $250,000 or less, they ain't gonna know what Patrick's talking about. Am I right or wrong?
No, because their clients aren't going to have the money to leverage these kinds of strategies, and that's I mean, that's the other thing. And I talk about it a little bit like in the book, but it's if you're in business and you're making $100,000 and you pay taxes, you're doing something wrong. It's so easy to spend $100,000 properly and to spend it in ways that are tax deductible, that still sustain your lifestyle and the business. That if you're paying taxes on $100,000, you're doing something wrong, man. If you're not, the first time you should have to worry about paying taxes is when you hit over 250K. Because
Where have you been all my life?
that's some scratch. That's some scratch.
Yes. So as you learn all these tax codes and all these loopholes that are legal, let's make sure that we're getting that. I want to, in case we're censored for
Legal.
being they're legal. I mean, what did you learn all this wisdom? Because the average person doesn't know this. Like I said, I mean, it sounds like there's a lot of opportunity out there. If you're listening to this, ladies and gentlemen, you might. So let me ask you this. We'll just say Daniel hires Patrick and says, "Hey, Patrick, I like what you're saying. Here's my last 2 years taxes, 2021, 2022, 20, right? Just say 2020, 2021, 2022. Once you've already filed, can you go back and do an addendum on your taxes, or that's not an option?
You can go back 3 years if there are things you miss. But here's the thing that I always tell people. Is it going to be worth it financially to go back and get that money? Or is it going to be more beneficial to make the changes now and move forward? Right? Because if the cost doesn't outweigh the gain, there's no point. Right? You can make adjustments now so that you don't end up in that situation again. But sometimes there's real money to go back after.
Well, like you
Right?
just said, that's 7,000 appreciation a month. You said it was
Yeah.
4 months. That's 28,000. I mean, I don't know what you charge for something like that, but I don't think you charge
No,
28,000. So you want to?
no, definitely not. No, yeah.
Yeah.
And
So
that's the thing. If it's worth it, and that's the sort of the thing that has to be analyzed, right? Because everybody's specific situation is different, right? Everybody has a different setup. And some people, the one thing that I found that really ends up screwing people over in the long run is they're just not keeping track of things.
yes.
So when you've got bad records, you've got bad data, you're not going to be able to make good decisions.
And you'd be surprised how many small clients I have, and they're beautiful people, but some
Absolutely.
of them still believe put all your receipts in a shoebox and here, figure it out. Yeah,
Mm-hmm.
just here you go. And it's like, okay, like, no. I mean, we're working on upgrading our system right now because we've grown substantially, and I'm tired of doing a lot of it, and my wife has been helping me with it. We use an Excel sheet and we use QuickBooks a little bit, but at least, ladies and gentlemen, the basic thing you could do every month is create a spreadsheet on Excel. It's free, and you just put your items down, and you just keep track of all your receipts. You staple your receipts to the Excel sheet, and that way you have everything intact, and your tax accountant can kind of break it up from there. But you don't want to put all your receipts in 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 a shoebox. And I keep saying in because I want you to. But this is another thing they do, or they just get their receipt because I believe when you first become a small business owner, is it takes you about a year to shift. So the thing is, you forget all those darn receipts. You're in the habit of throwing them away because you're not used to saving them, and you're not used to itemizing things. And that's one thing as a small business. And you have to understand, you have to keep track of your accounts receivables, and you have to keep track of what you're paying out. What are your payables and what are your receipts? That's basic. That's basic accounting. I think is. Am I wrong or am I right?
No, you're right, 100%. Yep, you got to keep track of what's coming in and what's going out.
So why are you so passionate about this? Enough of the facts, right? I want to talk about you more as we head into the home run part, good stuff. But why are you so passionate? Because when you spoke on stage, it wasn't just like I've heard a lot of accountants, and let me tell you, they speak and they put me to sleep. You did it, like I could hear your heart. Why are you so passionate in helping people and businesses?
Because I'm tired of seeing people get screwed, man. The people, I firmly believe that man perishes for a lack of knowledge, right? And knowledge is that you always hear that old saying that knowledge is power, right? But that's not 100% true. Knowledge isn't power until it's applied. So the reality of the situation is that applied knowledge is power, right?
Yes.
And our school systems do a piss poor job of educating people on finances. Our colleges do a piss poor job of educating people on finances.
I agree with
There,
you on that because I remember my son just graduated, and I was talking to him. I said, son, I said, doesn't it seem like we just dropped you off on your freshman year? He goes, yeah. And guess what? On freshman year, they have all the Gatorade, all the Red Bull, all the water in front of registration. But you know what's even bigger than that? They have more tables out there with Capital One, all these different, right? And they don't even have a job, and they approve you as a student for a credit card of $1,000, and people they don't even know how to pay their bills, much less what a credit card is good for. And then they get two or three credit cards, and now I would say there's a good, I don't want to lie on the percentage, but there's a good chunk of them that after the first, second semester, or the first year of college, they've already got bad credit because they were registering, they got this card. Even if it's for $500, you can mess up your credit.
yeah, Robert Kiyosaki's been talking about it for years. He's like, the lie is go to school, get a good education so you can get a good job so that you can someday retire and own a house, and then you can die peacefully. That doesn't exist. You're gonna if you're able to buy a house, you're gonna be probably paying on that house until you get too old to work, and then they're gonna con you into reverse mortgaging it like they're trying to do to all the old people around the country. So that way, once you die, they can take your house and resell it again and mortgage it to someone else. So it's this perpetual debt machine, because that's what between it's interesting. This is my pet peeve, Daniel. Honestly,
Let's go.
so
Come on.
we have enslaved generations to debt between student loans and mortgages that they will never be able to pay off, ever.
Yes. I agree, and that's why I'm
then
so
on top of
passionate.
that, debt has become the new gold standard, right? That's what props our economy up, is debt. And then to counteract that and keep the debt above the GDP, or keep our GDP above the debt, which I don't know how we're doing on that right now. I have to recheck it. But the government has incentivized people to invest in the stock market. which is why the 401k is a bad deal for the country, because it's overinflating these companies and their stock prices, and it's propping up, American dollars are propping up the stock market while the banks are leveraging the debt, and eventually one of the two is going to collapse.
No, you're right. You're 100% right. It's what comes to mind when we're talking about this, and people that don't remember this, I'm 49 years old, but I remember about 20 years ago, Enron collapsed. And
Oh,
it's
yeah.
because they look good on paper, but the reality is they're broke. If you think about what happened in 2008, everybody looked good on paper because the economy was great on real estate. Oh yeah, I'm a millionaire because I got real estate, and then the next thing you know, it's great because I mean we've been on this run since 2008 in real estate that's gone up, 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 and it hasn't popped yet. But there has to come a correction because it just what goes up must come down, and you're exactly right. And when you said that, I thought of Enron because even though they look good on paper, you don't know. Look at what happened with just right now. With I can't think of the guy with the crypto.
Oh, yeah. Oh, crud, what was his name?
Yeah, just my mind went blank. But he had that big stadium, billion-dollar
Yeah,
stadium. They were playing sports in it, and at the end of the day, they were just showing you the papers on the accounting on paper, but they were broke. And they
yeah.
called their debt. That's what the guy told them. That the guy from China, his competitor said, "Well, you know what? I'll buy it. Let me see. Like, let's do this." And he couldn't cash it out. So you have to use wisdom. You have to use wisdom, and I agree with you that because there has to be that point where the value is there in reference to stocks. I mean, we all want to make more money, but you just got to use wisdom. That's why a year ago I put all our money out of the stock because I have a feeling that one day here this year there's going to be a major correction, and I didn't want to be caught in that.
The other thing too is that nobody gets rich in the stock market. Nobody. Unless you're lucky, which playing the stock market is more like playing the lottery than playing the lottery is, because the lottery has specific odds, right? So, like for example, if you buy a Powerball ticket, I think it's like 1 in 1 million or 1 in 10 million is a winner or something. So if you spend $10 million, you're going to get one winner, right?
Yes.
The
You're
stock
right.
market isn't like that. You never know what's going to happen there. The one of the things that always comes to mind is that even with you know leveraging debt, or investing in assets like real estate and things like that, you can still fail, especially with what happened in 2008, like what you were talking about. I mean, there were a lot of entrepreneurs where they maybe had 30-40 million dollars in real estate, and then the bank went under, and all of a sudden the bank that bought out all of their assets and all of their debt was like, hey, you've got to pay this now or we're taking your stuff.
Yeah.
And in 2008, who had $30 million? Nobody. Right? There was very little liquidity anywhere because everything had gone down in value.
And
So,
everybody was leveraging the equity. So if they had $20,000 in equity, they were going out and getting a $20,000 pool or a $20,000 addition to the room, or they were getting out a home equity loan.
yep,
But
yep.
you're right. Ladies and gentlemen, write this down. I mean, people ask me, Daniel, how did you get to your level of success? It didn't matter what level of success I was at in that season. I've always lived below my means. I didn't live poor. I didn't live broke. But when I was making 50,000, living off of 40,000. When I was making 100,000, I was living off of 70,000. When I was making a quarter million, I was living less than 150,000, and I just saved the rest. And we didn't need nothing. But then as our revenue grew, we've always lived under. And the thing is this: is people don't understand this. I always talk about this now because that's why I'm passionate about our book, right? The Makings of a Millionaire Mind, because
Yeah.
I want people to have a better lifestyle. I want people to believe that when you open up your belief system to believe that it's possible for you, and you can become a millionaire, and you can have a better life for you, for your family, for your children. And I love what you said, Patrick, right? The best thing for me is my son and daughter, they didn't graduate with thousands and thousands of debt. We were able to pay off their college, and it's paid in full. But it's by the grace of God and the wisdom that we use. And you always want to pay God first. That's what I say, whether it's through a charity, through a cause. Out of every single dollar, the first dime goes to a charity and a cause. The second dime always goes to you. Pay yourself first. Get in the habit. You cannot afford not to pay yourself first. I always challenge people in this because I say, why can't I promise if you start saving a dime, sooner or later, your savings account or what you're paying yourself is going to attract even more success and more wealth. And I love what you're talking about because you're so right.
Yeah, I mean, you're right on point, Daniel. I mean, those are the two main things. One of the things that I strive to live by, and it's difficult, especially since we're all taught to live above our means through example. I try to follow the 40% rule, right? So
So for those
everything,
listeners that don't know what the 40% rule is, what is it?
live on 40% of your income.
Yeah.
Everything above 40%, 20% goes to taxes, 20% goes to you, right? Very similar to the 10 and 10 rule that you've got, right? Just a little
Yes.
tweak. Because that way, you just have to reverse engineer your lifestyle to figure out where you need to be financially. And if you can reverse engineer it, you can figure out how to do it. If you think about it, $5,000 a month, $100,000 a year, right?
Yes.
In 10 years, you're a millionaire.
And it's doable.
Yeah, absolutely.
It's doable.
There's no reason. I mean, there are so many things. The one real asset that no one can take from you is ingenuity and action. Right? So being able to think outside the box and then take action on it, right? Because that's the one skill set that all of us entrepreneurs share. Is we went out and we did something about it, right?
Yes. I
We
love
figured
it.
it out. And that's why failure for most of us isn't an option, right? We may fail at what we're currently working on, but the only time you actually fail is when you quit, right?
Ooh, say that again. I like that. That's a good one. Say it again, please.
The only time you actually fail is when you quit. So as an entrepreneur, we don't quit. This one might not have worked out. All right, on to the next one. We'll figure it out. Bring along our education we got by the School of Hard Knocks with it, right?
Yes. Well, I love this. Well, so as we're winding down to the last part of the episode, let me ask you this: what are your two best tax advice that you would give to a small business and entrepreneur? Besides hire Patrick, of course, that's number one. Numero uno, hire Patrick.
Number one. Number one. We'll say that's number zero. That's a pre-step.
That's a gimme. That's a gimme right there.
First, one of the most underutilized strategies that I've seen is probably the hiring of children, right? So hiring your children to work in your business, because there's zero tax consequence as long as it's under 12,000 or whatever the standard deduction is that year. I think this year is 12,900. It's completely tax-free income, right? And you get to control it, you get to direct it as the parent, or you can give it to the kid. It's all up to you. The other one is leveraging bonus depreciation. All right. And that's generally in conjunction with assets, right? So bonus depreciation, for an example, we'll say on a vehicle that's over 6,000 pounds, right?
Yes, sir.
So if you have a vehicle that's over 6,000 pounds that you buy in 2023, you will be able to, you don't have to pay cash for it. You can finance it, but you can write off 80% of that purchase price in 2023. So
Over
let's say you buy
60,000 pounds, over 6,000 pounds, you said?
over 6,000 pounds. So let's say you buy a G-Wagon. It's a $100,000 car right there. You get to write off $80,000 of income on your taxes.
Let me ask you this. Does it have to be in the business name or can it be under your personal name as long as you use it for business?
It's better if it's in the business name and you can co-sign for it, which that's usually how most business purchases go for automobiles.
Yes.
That looks cleaner, but if it's used for business purposes and you're the owner of the company, there's a little bit of a gray area there because sometimes the business might not have credit to qualify. So you may have to have credit and then, you know, maybe on paper, sell that vehicle to the business or what have you. So there's definitely, there's some workarounds for it.
Yes.
But the short answer to that is no, the business doesn't have to purchase it, but it always looks cleaner if the business does own it.
So last question. What's a quote or a scripture you rely on in your times of adversity, Patrick? A quote or a scripture that Patrick Rood relies on in the times of adversity?
My life verse is Philippians 4:8, which is finally, brethren, whatever is true, whatever is noble, whatever is right, whatever is pure, whatever is lovely, whatever is admirable, if there is anything excellent or praiseworthy, think about such things.
Love that, brother. Focus on the good is what he's saying. Focus on the righteous. How do we get a hold of you? Someone's here listening to this, watching this episode. How do they get a hold of the one and only Patrick Rood?
You can find our website, Rood, ROOD, financial.us. You can find us on Facebook at The Rood Financial. Or you can email us info@roodfinancial.us.
Love it. And we're going to have all that information on the show notes. Patrick, you were a rock star, man. You're a natural at this. Thank you for pouring into our community. Thank you for pouring into our podcast and our audience. They loved it. And ladies and gentlemen, we're going to have all his information on our show notes. If you're stuck in life, if you're stuck in business, we want to help you. Go to DanielGomezGlobal.com. That's DanielGomezGlobal.com and do your entrepreneur assessment. It's a free assessment that we want to pour back into you and give to you. And then also go to our website, The Makings of a MillionaireMind.com. That's The Makings with an S. Get our book, autographed book. It's going to bless you. It's going to help you. And get our course. Our online course has helped hundreds of people already. 27 powerful, life-changing modules that are going to radically shift your thinking, and the results are going to change. We have so many testimonials. So go out there and get your book. And lastly, we want to see here in San Antonio, March 17th and 18th at our Sticker Shock Speaking Academy, where we're going to help you build your speaking business and share your story to the world. Until next week, we'll see you here on the Daniel Gomez Inspire Show. Thank you for tuning in, and thank you, Patrick, again for being an amazing rock star. And we'll see you next week. Woo!
This is Daniel Gomez, and thank you so much for tuning into our show today. We'd love your feedback. Please drop us a comment, and thank you for leaving us a review. Don't forget to subscribe to our show and share this episode with a friend. And my free gift for listening to our show today is a copy of my best-selling book, You Were Born to Fly. To get your free copy, go to DanielGomezInspires.com and get your copy today. That's DanielGomezInspires.com. And to elevate your life and business even more, follow me on social media at Daniel Gomez Inspires on Facebook, Instagram, Twitter, and YouTube. Together, we will discover the key that unlocks your confidence.